Alright, so for this video I wanted to kind of give a high-level overview of the difference between what is your AGI versus your taxable income when you're looking at your Form 1040. Right, so I've got one slide in front of us here with the rules, some examples, and then a sample tax return here that we'll reference just to see where you can trace all the different pieces here that we're talking about. So your AGI, or adjusted gross income, is defined as your gross income minus adjustments to that income. Okay, so this is the amount that you're going to calculate before you deduct your standard or itemized deduction. Right, remember that every taxpayer gets a standard deduction, and if they choose to itemize because it's greater, they can take the itemized deduction instead. So this is the amount before you deduct either of those two amounts, and before you deduct your qualified business income deduction, if it applies to you. Right, so qualified business income deduction, that can arise if you have an interest in a pass-through business, like a partnership or S-corp, and if it's a qualified business, or if you're, let's say, a Schedule C filer for a sole proprietorship, and you also have a qualified business there. So what goes into gross income? Well, it's your wages, investment income, interest, dividends, rents, royalties, things like that, retirement distributions, capital gains and losses from trading stocks or crypto, and other types of gross income. Okay, now adjustments to income are amounts reported on Schedule 1, Part 2, and examples of those are HSA contributions, retirement plan contributions like SEP IRAs or traditional IRAs. If you're self-employed, you have the self-employed health insurance deduction, student loan interest deductions, and then maybe tuition and fees deductions if you're taking higher education classes at a university or college. So let's look at the return here just to recap some of those pieces. So I got a Form 1040 in front of us. The gross income amounts are the ones that we are looking here from lines 1 down through 9, right? And so these are the gross income amounts, and then the adjustments are reported here on 10A, right, from Schedule 1. So, you know, we could see wages, interest, dividends, like IRA distributions, pensions, Social Security amounts, capital gains, other income. These are the amounts that are totaled up to line 9 to reflect your total gross income. And then remember, your adjusted gross income is that amount minus the adjustments. So the adjustments, if we flip down to Schedule 1, additional income and adjustments, so this is where you would report that other gross income, and then the adjustments here, right? So Part 2, remember, we have HSA deductions, SEP plans, self-employed health insurance, IRA deductions, student loan interest, and so on and so forth. Okay, so those totals, once those totals are added up, you'll see that reflected here on line 10A, and then line 11 there we have your adjusted gross income. That's your AGI. You can find that on line 11. So now let's go back to the slide and talk about taxable income. So taxable income is your AGI minus the standard or itemized deduction and the QBI deduction, okay, as we kind of stated up here. Now, taxpayers can either choose a standard based on their filing status, right? So whether you're a single filer, married filing, joint, separate, head of household, you'll always have a different type of standard deduction amount, right? It generally changes every year. Or you can itemize deductions if you want to include a Schedule A. And like I said previously, the QBI deduction, it's available for taxpayers that might have an interest in a pass-through business, and so they can deduct that QBI amount on their return. So if we go back to the 1040, you can see here we have our AGI. There on line 13 is our deduction for QBI. So this taxpayer has an interest in a pass-through partnership. It is a qualified business, so they get a QBI deduction. And then on line 12 we have the standard, right? So you have your AGI minus your standard deduction. In this case, he's a single filer, so he gets $12,400. And then line 13, he gets his QBI deduction of $4,000. Add those two up, and then ultimately on line 15 we've got our taxable income, right? So our taxable income is on line 15, AGI is on line 11. And the reason why these two are important, obviously the taxable income number is the one that you are actually computing your tax on. So when this taxpayer computes the tax that's going to be reported on line 16, it's based on this amount, right? It's based on the taxable income now amount, not your AGI. Okay, very, very important distinction. So that covers it. High level differences between the two. I hope that was helpful. If you have any questions, please leave me a comment below. And I look forward to seeing you again on the next video. Thank you.